Okay, you should be able to see the screen right now. And what basically we're gonna do today is gonna start off clean chart, and we'll start by adding. I guess we'll start with the 1 hour indicator because that's kind of it will be quicker to cover and go over some rules, and then we just move on to the 5 minutes and then go in depth into depth. So let's just start. This is my chart. The 5 minute Aussie dollar, US dollar. I'm just going to change it back to euro dollar because that's the easier way to go. And I guess some of you already have access, but if you don't, it won't pop up on your screen. But if you go and look for TME hourly binary volume, that's the 1 hour binary. If you don't have access to it, it will show like it's locked. If you click on it, then basically it will open this oscillator, which basically what it's built of is volume bars. Okay, these bars, each bar is a 5 minute volume bar, and this blue line, not sure if you can see it, but this blue line here is the moving average line, which basically means that the way the script was written is that the CMA basically represents the expected volume on each 5 minute bar. So when a bar bursting out the blue line here, it means that the volume is higher than expected, which combining it with another overbought oversold indicator, which is usually we use the Bollinger Band, then it can be a great indication of trend reversals. And that's what I'm going to do right now. I'm going to add the simple Bollinger Band indicator on TradingView. And I'm just going to go with view and look over on how we will start with a buy signal, okay, or buy or call or whatever you want to call it. If you do options or if you do like, you know, exchange-based options or broker-based options, or even if you do Forex, all of the above can be used to all purposes. It requires some tweaking. Of course, if you use Forex, you need to decide where you put your stop and take profit. Usually, it's purely based on money management, though. So, but I wouldn't worry too much about it right now. I'm just gonna go on and kind of show you some examples of how we use this hourly indicator. So you don't need anything more than that. Basically, you have the hourly indicator set up, which is this oscillator, and then you have the Bollinger Band already on the chart, on the price action, and it's very, very simple to follow. So once the price action bursts outside the lower band, and I'm currently talking about buy signal, okay, let me put it, let me just write it so we won't get distracted. So we're talking about a buy signal right now, okay? So in order to get a buy signal, you need basically two things. One is that the price action, which are of course the candles, will burst outside the lower band, and at the same time that the volume on the oscillator, on the TME hourly indicator, will burst outside the moving average line, which basically means that you want to, in simple words, you want the price action to go oversold, okay? And you want the volume to be higher than expected. Once these two happen, then you can easily go ahead and initiate buy trade, whether it's exchange-based binaries, if it's Forex again, or broker-based binaries or options, all should work. And let's look, for example, at 6 a.m. this morning. See the price action burst outside the lower band, okay, at 6:10. This is, of course, the 5-minute chart. At 6:10, it burst into the band here, okay, and then at the same time, it closed. The volume on the indicator closed above. Let me zoom in a little bit. Closed above the expected volume, okay? In this point, it's enough for you to go ahead and open a buy signal, okay, going into the closest hour. It can also be the next hour. So let's say if you go 6:10, okay, so 6:10, you can go with 7 a.m. expiration, or you can go with 8 a.m., or you can actually go with both. But the expiration is not that important if you do exchange-based options, because you always aim to set your take profit, right? So this is an at the money strategy. So we're talking about entering around $50 to $60 at max, and probably getting out around 90. Okay. Of course, those are like the dollar values of the contract. And we're looking to get into the trade in the nearest strike. So let's see. We know that usually the strike, if you do Cantor, so it's usually every 5 pips. If you do Nadex, it usually varies between, I think it's 4. Yeah, I think it's 4 pip wide, irregardless the time of day. So I would say that your range would have been between 1.13320 to 300. So anywhere between this small range will be your entry point. And let's see what happens. So 6:10, we're going all over to 7. And of course, that's easier to see that at 7 a.m. it ended up in the money. And then going on to 8 a.m. also ended up in the money. Okay, so you have here both expiration that actually worked on a single setup using the TME hourly indicator. Very simple to use, very simple to execute. Let's see what happened next. But remember that the expression is not that important, because more likely that when it came up to this point, to this high, it was about going from 320 all the way to 450. So we're talking about um, 13 pips, right? 130 points. So probably around the 100 point, you would probably get to take profit out on both. Maybe on the 8, you would have waited for the 200 mark, but at some point here and maybe here, you would have gotten out on both contracts, and would be pretty profitable on these two. Um, just following the rules here. And I saw earlier that we had another example of a buy signal, and we're talking about the 820 mark, which was actually an hour ago. Let me remove these. 820, it was an hour ago. Burst outside the band, this bearish candle, and so this will be our first indication. And then we are zooming in, and we see that at the close of the candle, the 820 candle volume indicator also crossed above the expectation. So what we do, we open again. Let's see what the strike would have been. So we're talking about probably 350, because we are doing, let's say we're doing Cantor, right? So 350, it's somewhere around here. And then we probably do 340. So if you do like Nadex. So here, let's see. Probably this will be the very narrow strike range if you use, depending on what platform you use. So let's see what happens. So 820, we're going again. You can go to 9, or you can go to 10, or you can go to both. So 820 went down. Okay, went down a little bit, and then started to come up. And at 8 at 9 a.m. actually, it closed at 355. So this would have been a case of winning trade at expiration. Probably a take profit would not take place here because it just came up above the strike in the last 5 minutes. But this is another indication of how powerful this hourly indicator is. So you get another one in the money on uh, hourly indicator for 9 a.m. and now we're going all the way to 10. Probably we already would have been taking profit here, most definitely. Okay, somewhere here, maybe even here. But I think that 10 a.m. also will land in the money at expiration. So we're talking about what, 4 and 0 within like 3 hours or even 4 hours if you go with the 10 a.m. So that's basically how simple it is to use this um, TME hourly indicator. Very simple, very straightforward. Not many complicated, script data in it. And this is just some example on buy signals. I want to try and find example for sell signals before we moving on to the 5 minute, which has slightly more data in it and require a little bit more attention to kind of follow. So let me just erase all these drawings. And of course, if you have any questions, you have both question section and you have the chat. So feel free to kind of pop in some questions that you might have and I'll gladly answer you. So let's remove all drawings and let's try to find some cell signals. Okay. Okay, so let's see what happened here. So we had last night, last evening, right, on the 23rd, it was, yeah, last night. So we had Euro USD bursting outside the upper band, okay, at 7:35. Okay, let me just write it down. We will know this is a sell signal. And, okay, so okay, so 7:35, right? 7:35 at night. So we had a bullish candle bursting outside the upper band. Now, because it's a sell signal, we're going the other way around, of course, from the buy. So if we buy, we looked for oversold areas. Here we're looking for overbought, because the basically the idea behind it is that it's a simple common sense. When you have more overbought, when the price is overbought, you basically basically means that you have more buyers than sellers, and the probability of it to reverse a little bit, even if it's just in the short term, is higher than when the price is overbought, oversold. When it's oversold, there is a higher probability that the in the short term that the trend will kind of make a correction and go up in price. So that's basically the common sense behind the idea behind using overbought with oversold areas with combining with volumes indication, but not just volume. you need the volume to be higher than expectation. Okay, so that's basically it. Higher than, the expected. What I mean by expected volume, it's just the math that this moving average, the line here, we calculated it on the script. So not pretty sure how many candles it takes into place. I think it's the last 20 candles, but I'll have to check on it. But it's a very powerful tool, because when the volume exceeding what was expected, then you'd be able to take it to your advantage and not just trade any like overbought or oversold area, because that's just can give you false data and can get a lot of false signals in it. So it's important to follow this hourly indicator as well, combining it with the Bollinger Bands. Anyways, moving on. So we had 735 here, which burst outside it, but I wanted to be, sorry, I just wanted to be red. Okay, so we had this, and then at the same time, this massive volume candle burst outside the band. Okay, burst outside the expected moving average volume. So next thing to find is basically the strikes. So we're talking about 880, right? 880 if you do probably 8x, so 880, that's right there. And then you can go with even 400, 400, right? 900, sorry. 900, it's probably be here. So in this case, we're looking to enter anywhere between 40 and 60, right? Like around at the money strikes. So we're talking about 735. So our expiration will be, you can go 8 or you can go 9. I would suggest going 9 rather than like less than 30 minutes, because this is way too short. But let's see what happened anyway. So 735, the price went back up. Probably here we would have executed the counter, let's say, contract all the way up here. Here it was an at the money, right at the strike. And let's see what happened at expiration. This is 755 candle going into 8. So this is the expiration value of the first trade, of the 8 p.m. trade. So as you can see, even if the take profit would have not executed here, down here at expiration, it would have still been a winning trade. Okay, so that's let's say 1-0 on the sell, and let's see what happened at 9. Going to 9, it's here. 855 candle going into 9. So as you can see, both candles, both expirations with both strikes landed in the money at expiration. Probably not sure if a take profit would have taken place on each, because it's a very narrow range, but it doesn't matter because at the end both contracts landed in the money. So that's another example of how to use it for a sell. So as you can see, if I'm going from 735 last night all the way to like actually 9:30 this morning, these are the two actually the four example that I showed you earlier. So we're talking about 6-0 in a matter of like, I would say 1.5 trading session. So that's pretty much what it is. That's so easy to follow. That's basically what the hourly indicator is, and you can do it over and over again every day. Of course, you won't get 6-0 every session, or even 4-0 every session, but you can see that it's very easy to follow, and it will show you the volume indicator will show you opportunity only with between 75 to 85% accuracy. So, you know, what we try to achieve here is kind of a peace of mind while trading, and it's something you can be confident with while following the charts. So the worst I've seen was like 3-0, 3-1, sorry. So that's basically it. And I very really suggesting you to, if you can, grab this indicator as well. It's a very powerful tool to have in your trading portfolio. I will link the link. We'll post the link to this after. We'll go with the 5 minute. But if you have any question regarding the hourly indicator, let me know. If not, we'll jump over to the exciting stuff, which is the 5 minutes. I'll give it like 2 minutes before I remove everything, and we can go on. So Joe asks if we can use it for all pairs, and yes, you can use it for all pairs. It's comparable with every available trading pair. Haven't used it yet on like indices or like, gold or silver or metal stuff. But as far as currency pairs, definitely you can use on every major pair. It will work on every pair that is available to you. Okay, so I think if we can do like at the end, if you have any more question, we can do like a quick Q&A session in the end. But for let's not waste any more time. Sorry, and let's go on the 5 minutes. So I just removed all the indicators, and now all of you probably have access to it. So you're just going to go to the indicator type TME again, and this indicator will show up. TME binary high low. This is the 5 minute option indicator by us. So we're just gonna edit. Okay, and that's what you will see. Again, using the 5 minutes. Okay, 5 minute signals. 5 minutes, sorry, chart. We're just gonna go and let me remove the drawing as well. Okay, that's what your chart should look like. Okay, it's kind of messy. I mean, it's kind of not messy. It's kind of busy. That's the word I was looking for. But don't worry, we'll go everything. So you go over everything. So you see that you have like multiple arrows, multiple like horizontal lines in very different, in different shapes, and not shapes, in different like sizes and lengths. And basically I just gonna do some order in the usage of the indicator. So let's just start again with like the buy setup. So it's very important to note that you will see a lot of arrows. You will see almost, sometimes you'll see arrow every other 5 minutes. You don't just follow the arrows, and I'll explain why. So the arrow will show up sometimes without an horizontal line with it. The arrow basically was scripted that way that it shows you um, the expected trend, short-term trend, as far as like the next 15 minutes. Okay. As you know, sometimes within these 15 minutes, the data can change rapidly. So it can change after 5 minutes, it can change after 12 minutes. Okay, but the arrow will still be there. It's not a painting indicator. What a painting indicator basically mean is that you will see a lot of like MetaTrader, MetaTrader or like Thinkorswim indicator that basically shows arrows. But if you try to go offline and kind of backtest these arrows, you'll see that it like gives you 100% win rate, which is ridiculous, right? The answer to this is because these indicators are what's called the painting indicators. If they fail, they will like erase the arrow from the data and it won't be shown on the chart. That's why a lot of like other services or companies, I'm not being like shady or anything, but that's basically the truth. They will kind of sell you like screenshots of like 100% stuff like that, because you'll see and you will go to the screenshot and it won't be altered, but um they it's not a fake, but you will just see that actually all arrows basically give you a good setup, but that's because the failed one are being erased from the chart by the indicator itself. It's like a self-destructive formula. Let's call it that way. Okay, so be aware of this. Usually, importantly, if you use like MetaTrading or MetaTrader or Thinkorswim, because these softwares, when you script on it, it's easier to kind of make an indicator to get painted and disappear if it doesn't work. Okay, so that's just a side note. So basically, these 5 minute arrows will show you, and they will be still be on the chart even if they fail. Okay, what I mean by fail, let's see on this, for example, 7:30 5 minute, you'll see that the next three candles didn't follow the arrow. In other scenarios, not on this indicator, this arrow will disappear from the chart. Okay, and you'll see, okay, so here there wasn't an arrow and it failed. Okay, the indicator rocks, right? But it's not the real case. It's just being a painting indicator, which just you know not a fake, but I don't know, call it what you want. But that's basically what the arrow does on this indicator. They basically, what the arrow do, they basically indicating the trend in the possible trend. It's important to say that the possible trend in the next 15 minutes. Okay. Now, in order to get it fully work, you need to follow the most recent horizontal line. So you will see different colors. Okay, um, the colors don't like play a significant role in this indicator. You can use these um, red lines, you can use this gray lines, or you can use the blue lines. Doesn't really matter. Okay, and you can actually ignore these lines that actually following the price action. It's kind of meaningless. It's just to show you the overall picture of of the current trend. So it doesn't play a role. So you can basically ignore it and just focus on the candles, the candles, the arrows, and the horizontal line. Now let's just go into practice. Okay, so basically, an arrow and a line are good for like 3 candles after the arrow showed up. So basically, you can use the the trade. You can look for trade opportunity up to 15 minutes after the arrow appears. Okay, not including the signal line. So let's say 7:30. You can use this arrow up to 3 times after the arrow formed. So 7:30, you can use it here, here, and here, and that's it. Okay, you can't go longer than that. Okay, so once the euro pops, very easy, you look for sell signals in this case, right? It's a sell put arrow, you look for sell signals. What the strike? The strike will be the most recent. Sorry, let me remove it. Be the most recent. What it's called? The most recent horizontal line. So, oh, and it's important to notice another thing, that if the okay, never mind. I will go it later. Okay, sorry about that. So you just follow the horizontal line. Okay, so let's see. We had a sell arrow here. Okay, and then let's see. We're looking for the first trade. What happened here? It didn't go up all the way to. We have three basically horizontal lines here. If you can see, we have 1, 2, and 3. Okay, you can use either, or you can use all of them, and I'll show you what I mean. So we had this 735 candle didn't even go all the way up here. Okay, if you chose to use it as ITM, like in the money, I probably could have got like, no, I don't think this would have worked even with ITM, because we're looking for the first horizontal line is 506, the next one is 518, and the third one is 525. So we're looking at a strike between 510 to 530. Okay, so basically our range for the next 15 minutes will be in something like that. Okay, you always go with the nearest strike, but if you sell, you go with the higher one. So if your first line would have been 1.13506, you won't go with the 500. Okay, you go with the 510, because you're looking to sell, you're looking for a higher probability. Okay, so this candle didn't work on the first one. Let's see what happened on the second one. Okay, second one went and touched the 510, so you probably got executed here for at the money strike, and then it went all the way up here and touched the 530. So on this single candle, you could have basically got into two positions. Okay, selling it from 110 sorry, and 130 for between 40 to 60 each. You can take it, obviously taking profit, or just going into expiration. And let's see what happened. Basically, you can easily see that the candle ended at 495. So basically, both of these sell signals landed up winning. Okay, so on this signal candle, we had 2 and 0. And let's see what happened on the third one. The third one also touched both of these strike. Ended up slightly above the first one, 518, but the second one landed in. So in this short 10 minutes, you got 2 and 0 on the first, and then 1 and 1 on the second. So overall 3 and 1 in just, following the arrows and the horizontal lines. Okay, so this is a 3 and 0 in like 10 minutes or 15 minutes of time. If you looked on the first one, which didn't execute anything. So basically, we're talking about like something like $150 more or less. If you use the Nadex, or if you use Cantor, it depends on what price you got, or how many contracts you opened. And if you use just the simple options, then depends on how much money you invested. But that's basically an example of how to use it as an at the money strike. Okay, now you can use it as an out of the money strike as well, but here you must have to kind of set your take profit in action. So let's say this one, we had the first candle we had going into 510, right? Or 530. So the candle went all the way up to 530. So here, probably when it got to 535, the 510 strike probably would have been priced around $85 if you want to sell it. Okay, so if you opened here a sell at $85, price came down and closed below. So even if at expiration this OTM strike would have been a winning trade, but the main suggestion is just to place a take profit order here at around 50. So you have risk of like 15 and take profit of like, what it's like 35, right? Um, so yeah, so you risk 15 dollars while opening it at 85, taking profit at 50. So your basically profit is 35. If you waited till expiration, you risk 15, but you got the whole $85 back. So that's another way to do it. If you would have done it here on the second candle, again, you would have got the 510 at $85 sell when it got to 535 probably, and then it lost, but it probably would have taken profit if you would set it to 50 or even 55. But the interesting point here is that it went all the way up to 585. So if you would have opened 85 sell here for the 530 strike, you would have got this as full expiration. So let's look about the full expiration values, for example, of selling at 85 without TP. So we're looking about just on these two candles, so we're looking about one, right? So we had winning of, let's say, wins. We had basically, sorry, so wins we had two, right? So 2 times 85, let's say it's 85 minus the probably like $4 fees, something like that. And the losing would have been like 15 times, it would be, oh, it's just one loss, right? So 1 times 15 minus 2. Oh, minus 1 actually. So we're looking about $14 minus $14, and here we're talking about, it's so bad math. 85 times 2 minus 4, we're talking about 166 minus 14, we're talking about, again, net of like 85, 152. So it doesn't matter if you kind of chose to go OTM or at ATM, your result would have been the same. With ODM, it's just risking less. Okay, if you would have kind of scalped, so with TP, sell 85 with TP, you would have had like probably just 3-0, like losing trade will be 0 and winning trade will be 3 times 35 minus, we open like, so minus 6. So looking at 35 times 3, that's 105, minus 6, that's 99. Okay, talking about a net of 99. That's with like taking profit just on these two setups here. There was one signal which gave you like 2 setups. Okay, that's basically an example of a sell signal. Any questions so far? Okay, Joe has quite questions, so let's see. Now I have run system, is this much different? Yeah, this is, that's different. Okay, that's different. What I'm talking about here is like purely the indicators. It's not, don't have a video on it. It's not part of the 101 videos or strategies, different strategies completely. So ignore it. Joe asks, so you put in a working order for those two above strike. Yeah, you can put working orders as well. If you go out of the money, it's fine. It's totally fine. It will just make sure that if you decide to scalp, then make sure to kind of follow it and that you have the take profit in place. If you just do it, you feel like risking $15 and you think that it's just you want to follow it and go for full expiration, you can do that. I mean, it will give you a result similar to like just go and add the money with it, as we seen like $150 after fees. That's pretty good in like 10 minutes if you have the money management to do so. Go ahead. What about the buy in between? Okay, I will get to that. And you were talking about the hour. Yeah, again, both strategies that I'm talking about right now, the indicators are not part of the 101 strategies. Those are different, completely different strategies. Okay, both the 5 minutes and the hourly are not in the videos on the 101. So those are, don't even kind of try to kind of find uh, similar things to the two. Okay, just it's completely different stuff. Just don't confuse yourself with it. Okay, if you want to follow you can follow both. You can follow the one-on-one strategies and you can follow the indicators. It just give you more wide portfolio. Okay, so let's just go over the buy basically, and that's basically what we have left to cover. And of course, if you have any questions, just you can keep asking and I will get to it. Okay, let's just remove all drawing tools. Okay, so good question. Buy signal. Okay, so we had the buy signal in between. Oh, it was here actually. Okay, so we had buy signal in between, right? So let's see what happened on this buy signal. The buy signal show you an arrow, right? And then it showed one horizontal line down here and one down here. Okay, so you had 1 and 2. Let's see what happened. So we had the horizontal, the arrow candle, and we were looking for trying to find something here. Of course, it didn't get to that level down here, this candle. So this is a no-go for us. Go now. Let's look into the second one. So the second one touched the level. Okay, the level is 820, 420. Sorry, 420. Let's put it in green. So 420, and then the next one probably will be 410, right? So 420, 410, or even 400, right? Because it depends on what you do. If you do forex, counter or nadex, that depends on your platform. So I think both of them doesn't really matter. You actually have 410 or 400. You don't have 420 because it usually go like uneven numbers. Odd numbers, sorry, not even numbers. So on counter you will have 400 or 450, but on Nedex you will probably have just 410 or 430 or 390. So let's move this down here. So let's see what happened. This candle dropped, okay, and we were opened a buy signal at the money from the 400 and actually from the 410. So both of them, okay, depending on what platform. Let's say you trade just one platform. So doesn't matter. You were open to just one setup here, whether it was 410 or 400, and let's see what the candle did. It closed around 418. So it's definitely an at the money, in the money, a winning trade. So you have another one, and then the next of it. This is the last signal basically. So it closed right at 400. Okay, so this one might probably be a slight loss here. So we're talking about 1-1. Okay, 1-1 scenario on this last candle. Okay, so we're talking about if you open it for you taking the whole thing as an example of like 1, 2, 3, 4 um, trades. Sorry. So you're talking about something like we said it was like 3 and 1 here, then 1 and 1 here, so 4 and 2, right? If you use add the money, so it's still profit because it's 1 to 1 all, every time. So we're talking about 4 times 5 is 200 minus 2, it's 100, so $100 more or less. And let's look another buy signal here. So we had the buy signal here, okay, just after that. And let's see where the horizontal lines are. So 399 here, and then 330, 300. So we have a line here, 399, and a line down here, 300. Okay, let's see what happened. The first signal candle went down at 399, always forgetting to remove it to like the actual strike, which is 390. 390. Oh, come on. Sorry. 390. Okay. So this candle went down to the 399 and stayed there. Depending on your strike, might got executed at like $60, but let's say it didn't. Okay, so this strike here, let's say it's a no-go. The next strike, the next candle went down, executed at 383, so probably a buy signal was executed up here. So we're going all the way up and ended up in the money, so 1-0. Okay, and then the third signal, as you can see, also went down and closed out. So we have again a 1-1 situation. So it's kind of breaking even. Still in profit overall for $100 on this short, um, like probably hour. And then let's see what's going on here. This one obviously didn't have anything to do. This one probably had anything to do. We're in a high volume scenario right now. Let's go back a little bit. Trying to look for something that was pretty obvious. You need to follow actually it's very important to follow the horizontal lines. You know, you need to be a little bit patient because you will see a lot of arrows, but not a lot of lines, or not a lot of time that the actual candle will touch the line. So that's why you need to be patient with it. It's very, very important. And if you want to be extra cautious, you can just go with like, you know, 2 candles after the signal candle, or whatever you choose to do, that's fine. But you can go all the way up to 3, not including the signal candle. Okay, so that's very, very important to note. Let's see here. I think that's here, right? Talking about this 1, 2, 3. Yeah. Okay. So here is a good example of like, although it was like 10 a.m. last night, usually probably you don't trade using these hours, but let's say we had a buy signal here, okay, and then we had 1, 2 horizontal lines. So the first line is 780, and the second line is 775. So I would say that you're looking around 770 area, right? Because we're looking at even numbers, odd numbers. Sorry, so 770 area, yeah, for a buy. Okay, and let's see what happens. So the first strike came all the way down to 775. You might have got a buy at $60 here, might not though. Not sure, it's very hard to tell. The second signal definitely got into the area and closed all the way above it, okay? And the third one closed right at the strike, probably slightly below. So this is another 1-and-1 situation. But if you would go with, for example, buying it at like 15 or even 20, because this is a low volatility environment, okay, so even a 1 pip usually is enough to get you an OTM strike. That's also very important to notice. So usually when it's like late at night or like after 7 p.m. Eastern time, you'll usually see that a slight movement is enough to get you a great OTM strike, OTM price for your strike. So even probably you could have got this 770 strike when it got down to 760 here for like $25 even. So even if you got this at 2025 and got full expiration, if you decide, that's a 70 to $75 profit. And then you try to get this one again, and it probably, let's say it's also executed, so minus 25 here. So we're talking about a net of probably $50 or $45 after fees. So that's not a bad idea to do. So again, it all depends on your money management. It's not gonna get like erased at the end. You know, you have more winning than losses, even if you use like OTM or ATM or even ITM. Okay, but if you use ITM, make sure to use stops. Um, you know, to kind of get out and not risk the whole 75 to make 25. So kind of you need to manage it. Although in the 5 minutes it can be kind of hard. But yeah, so basically you can choose if you feel like, and you start with like a small account, you can choose. You know, OTM is always good. You won't miss a lot. That's the best thing in this strategy. You won't miss a lot. And even if you miss, sometimes you miss the fail one, which is good. Okay. And even if you miss one fail and one good opportunity, you will still be ahead because you're probably gonna get later like 1-and-1 or like 2-and-1. And with OTM, 1-and-1 is more than enough to make a great profit. So that's basically how it's again, when you understand it, it's very, very simple. Okay, it's very simple strategy. You don't need to do much. You just need to follow arrows and lines. That's all. And if you have like a great vision when you're starting out, then you know you're on your way already. Let's see what happened here on the last buy signal here, let's say, and then we'll try to wrap it up and get some questions. Okay, so this buy was around 10:45 p.m. last night. The line was around 880, so it going down to 870. Okay, 870. That will be our strike for this purpose. And then we look at the first signal. The first signal didn't even come close to our line, so we ignore it. Second signal candle came right to our line, executed a buy signal at 50, let's say, close it up here. That would have been our first win. Second one came again all the way to this 870 mark, close all the way up here, and then you close the deal. 1, 2, 3. No more looking at these lines. Okay, up to 15 minutes. You got 2-0 here. So you see overall, if you get 1-1 here and 1-1 on the second one, and then you get 2-0, that's it. Because on the 1-1, the profit erased the losses and vice versa. So if you get 0-0 and then 100, you're 100 ahead. Yeah, that's basically what it is. Very, very simple strategy to use. Questions? Any questions, guys? Okay, Joe. So the lines are strike rate or support and resistance, and that's what you're looking for it to bounce off. Um, well, yeah, you can say that. I don't want to go like into very much details on like how we used to kind of script it, but yeah, you can act as if those are like support and resistant lines. That's a good idea of like a good way of looking at it. But make sure you don't like, well, if you do like pure broker-based options, you can see that even if you got right at the lines, in this example, you still got like 2 and 0. Okay, for example, on this line, and again on this line, this buy again, and then you had this buy again. So even on simple options, you could have got like, let's do the count. So you got 1, 2, and then 3, 4, and then -1. So 4 and 1 on just a simple 30-minute using just the line. Okay, so even on simple like options and broker based, not like on exchange, you can use these lines to kind of trade off of the lines right on the line. Okay, so the lines are super important. You just because let's if you just go with the arrows, then you get, okay, you get 1 0 here and then lost here. Okay, so 1 1, and then you probably got lost here, so 1 2, and then lost here 1 3, and then you lost here again, and then you lost here again, so you won 4 already. Okay, 1 win, 4 losses, and then you win here, so 2 and 4, and then here you lost, and then 2 and 5, and then 3 and 5, and then 4 and 5, and then 4 and 6, 4 and 7. Okay, 4 and 5 and 7. Okay, so it's not gonna work if you just follow the arrows. Okay, don't just follow the arrows. That's what I want to emphasize. Don't just follow the arrows. Always follow the arrows and the lines. Okay, Joe. Okay, Joe. Okay, Nikolai. The blue line from last night was in odd shape. It looked like it followed the PA, and is there any difference in the lines at all? So no, there is no difference in the lines at all. Even sometimes the blue line will follow it, just kind of mark it as like Joe said, it's like acting. Sometimes it's a support and resistance, and sometimes the blue line will follow the chart and kind of act as like um, uh, how do you say it? I forgot the word. I'm sorry. So it will act as like dynamic support and resistance line. So dynamic support and resistance means that it's basically following the price action and creating like a shape that will show you dynamic of the support and resistance instead of like an horizontal line. Okay, so you can use that line as well and follow it. Because for example, it can be shown like this. Let's see. It can be shown like this. Okay, and let's put it in blue. Okay, it sometimes can be shown like this. That means that it's acting as a dynamic support and resistance. If you don't want to overcomplicate stuff, so just when you see the blue line like kind of following the lowest or highest price of the price action, just you can just choose to ignore it and then just follow the pure horizontal lines. That's basically my suggestion, because you all just starting off. So just follow it, and until you feel like comfortable, and you will already know that once you see a setup, you will know exactly what to do when you see one. um, so just make sure to follow it, and yeah, and that's basically it. Don't if you see like something that like you saw last night, when it's kind of getting dynamic, it will happen in like a very very low volatility environment. So maybe you want to try to kind of focus on, you know, more high volatility times. I don't say that it doesn't work in the morning, in the evening. It works. Okay, it works even late at night. Don't worry about it. I know you have like a, day job and stuff like that. Well, most of you, so it's fine. Um, you'll see you'll have to be more patient, of course, because the volume is not there. But if you choose, you can choose even maybe to switch to like the Aussie dollar pair or the Japanese pairs, that you might see more opportunities coming from this side. um, but in general, just follow the horizontal line, the arrows up to 3 candles. After the arrow line, the arrow candle. So if you're looking at this cell, so you're looking at 1, 2, 3, and that's it. Okay, because usually also on the third one, you'll already see a next arrow. Okay, like an opposite one, like here. Okay, you see here 1, 2. On the 2, you already see a different one, and then 1, 2, 3, and on the fourth here you see a different one, and then 1, 2, 3. On the 3 you see a different one. 1, 2, 3, you see a different one. Okay, so it's 5 minutes. It's very fast. Okay, you don't want to stuck in for like 2 hours or like an hour or like even 30 minutes. You don't want to. You just want to get in, get out quick, and then move on to the next one, next arrow. You don't need to overthink it. It's very very simple. Uh, Super simple. It's just follow lines and arrows. It's like elementary school, knowledge. That's basically what it is. It's very simple. Any more questions, guys, before we wrap it up? Joe. Okay, thank you, Joe. Before you go, I just want to give you the people who attended. We decided to kind of, if you decide to get the hourly indicator, so we usually give both of them for 199. And the hourly indicator costs like 129. So because you already have the 5 minute, which costs 149 usually. So we wanted to give you the indicator with a discounted price, the hourly indicator with discounted price, instead of like 129. So we'll do it for $39. So if you want, I'm just gonna post the discount code here in the chat, and then you can just go ahead to the link that I will post, and then you can just enter it in like when you check out, and then instead of like 129, it just give you it for $39, which I think it's worth it. And you can just practice it, and just add another tool to your portfolio. I think it's a very good tool to have. So I'm just gonna post the link now in the chat, and I'm also gonna give you the discount code. And if you choose to use it, use it. You can, you don't have time limit. You can use it whenever you want. So yeah, so if you don't have any more questions, so yeah, we can wrap it up. Cool. Okay. So yeah, I'm just gonna post the link now, and gonna stop the screen sharing, and thank you very much for attending, and have a blessed week.